This is the market video for the week of November 24th, 2014. I am Michael Saul, also known as Tiny. I will be your gracious host. Before I begin with the market, I just want to take the time to wish you a very happy Thanksgiving. Thanksgiving is coming up this week. It is Thursday, in case you're not in the United States. But even if you aren't in the United States, it's still a great day to reflect about everything that you are thankful for. I've had a rough couple of months here. I haven't been able to sit in front of my computer for very long. I've missed out on trading the market. I've missed out on a couple of consulting jobs. What I do with my other business, I've had to cancel a couple of them. And it's been tough. The pain has sucked. But I look at my kids and I'm thankful for my kids. I'm thankful that my wife is with me at least this week. Who knows if she's going to leave me next week, but at least she's here for the time being. I'm thankful to be able to record this video so that you could watch it. I have a lot of things to be thankful for, and I don't mean to turn this into a little whine fest or I'm a little bit of crying. That's why I put the really heavy music to start. But I just want to let you know that I am thankful to be able to do what I do. I live in a great country. And times were a little tough, but they're turning around, and it's going to be a great rest of the year and a great 2015 for me and for you. So, as always, your feedback is welcome. Just drop me a line and let me know what you think. Let's take a look at the market now that I'm done scratching my scabs a little bit, I guess. So here's the S&P 500. We popped into that 127% external retracement that I was looking for. I thought we'd get there sooner rather than later. The next level to watch is the 214.25 number, which is 162% retracement, external retracement. And what that means is it's outside the last swing. Okay, that's what makes it external. I think we get there by the end of this year. But as I've been saying for the past couple of weeks, or at least the past couple of days on the email, I think that we're overbought here. I think that we're due a rest. I do not think it's a shorting opportunity. I don't think you can try to time where to get short in here, but I do believe that we are going to pull back here. I do believe that that pullback will offer a buying opportunity when it's done. I believe that we are extended here. We're stretched. I'm not running around like Chicken Little. The sky is falling. I don't think that we're going into a big bear market right now, but I do believe that we should be pulling back sooner than later and setting up for one more end of the year move higher. The Dow also at a new all-time high, also closed below the open, gapped up, and then kind of sold off. Here's what it looks like intraday. We get the gap up, and then it kind of sold off all day, the S&P too. All right, so, I mean, it was net bullish on the day, but, I mean, you can't really call that as long as you were in before the gap up, you were definitely okay if you were long. But if you got in at the open, then you were down the whole day. All right, so that's the challenge with chasing overbought markets, especially gap ups in overbought markets. All right, here's the mid caps, new high, but again, closed below the open. Did close at a new all-time high, though. But again, closed below the open, traded down most of the day. Let's look at the Nasdaq acting well. Now, I believe the Nasdaq will tag its highs. I believe it will hit a new all-time high. I don't think it will happen this year. I think it will happen first quarter of 2015. But the way that we have been going, I mean, look at this trajectory here. This is just a nice solid move to the upside here. It could happen the end of this year. By the end of this year, I just don't think it's going to. I think we're overboard here. I think we're due for a rest. I would like actually a nice rest that kind of shakes the tree a little bit, gets people talking about, oh, the bulls are taking profits into end of year. I think that the more fear, I guess if you could call it that, because I don't know when the last time there was fear. I don't care what the VIX said. I think people have been confident for quite some time here. But I believe that if there is at least some minor fear that, oh, they made all their money, they're locking it in, I think that's going to be a catalyst. That's going to give us the opportunity to get on board for the late year move. All right, so that's the Nasdaq. And then the Russell, still lagging. And look, this is definitely an issue for me. We are in the time of the year where the small caps tend to outperform the large caps. So if the Russell doesn't step up here, I'm not saying we can't go higher, but it could set up a pretty nasty sell-off if it doesn't happen. I don't think by the end of the year that happens. I'm just saying that if the Russell doesn't step up, take the leadership position like it usually does the end of the year into the first, whatever it is, first few weeks, first few months, whatever the seasonality is, into the new year, then we got to watch our back. I don't think it's time to just start throwing out shorts, but absolutely keeping things tighter than usual, keeping management tighter than usual, okay? I'm not Chicken Little. I'm not running around, the sky is falling and all that stuff, but it's my job to be prepared. I mean, it's your job too. It's not just sit around here with this attitude, oh, we're never going down, and oh, don't worry, it's just we're going to keep going up. Yeah, maybe we are going to keep going up, but our job is not to just sit there and randomly get in. Our job is to wait for the best opportunities after pullbacks when we have market timing on our side. And speaking of that, just want to make a little pre-announcement here. Paul Schatz and I will be doing our annual Mastering Market Timing workshop. We'll be doing it in a few weeks. We also have a wonderful bonus that we're going to give, which is the January effects list this year. And we feel that the January effects is going to be awesome this year because the Russell has been acting piggish. So we feel that even for a short window of time, we're going to see the small caps outperform. So we're going to do the Mastering Market Timing workshop, Paul and I, and we're going to include the January effects list, at least for all early signups. But get on the list at stockmarkettrendsex.com or paulandsaul.com. You'll see the URLs in the description. Sign up and be informed. We're going to put out an email early next week for an early bird list for those that want to sign up. We're going to be offering a discount, and then we're going to go to our partners and do a promotion for it. But it was a great club. Got a ton of great feedback last year when we did it. You'll be able to read all about that, and we're looking forward to even a better class every year. Our goal is to go one step better from the previous year. So we're going to be doing that with the Mastering Market Timing. And, of course, like I said, we'll also have the January effects list. Let's look at some sectors here. Here's the semiconductors into the upper Bollinger Band here. So you're at multi-year highs here. Let's see how far if we go. Okay, yeah, I mean, we're pretty... I haven't been this high since, oh boy, I got to go to the monthly. There we go. Okay. So we see here next resistance, 764.47. That's a good 100 points from here. It's a nice, but we haven't been this high since, what is it, 01? That's a pretty nice size move here. Let's go to, we are into a little resistance, the Bollinger Band. You can see how the Bollinger Bands have kept a ceiling. So again, I mean, I'm looking for a pullback, but mostly because we're overbought, not because we're in the Bollinger Band. I don't like to use indicators. I like to do the analysis first and then use indicators to confirm, not opposite. Clad tanker up, possible small double top here. Okay, Intel, nice push up on Thursday and then a further push Friday, but a close below the open. Nvidia. Yeah, I mean, looks okay. Come a possible small double top. Again, these aren't really like Clad Tanker and NVIDIA. These aren't like huge, big reversal double tops. They could just be tests here, and then we pull back or consolidate before we try to move higher if that's what we're going to do. Here's ADI up above the 200-day moving average. So watch that finally clear the moving averages after several months below it. Let's look at the banks. Yeah, I mean, consolidating here. Yeah, I mean, it's a little sloppy. Let me get rid of these Bollinger Bands. I apologize. Makes it a little cleaner here. I mean, consolidation here doesn't look bad. Bank of America doesn't look bad. JP Morgan, sloppy but doesn't look bad. Citicorp, or Citigroup, sorry. Looks like it wants to test its highs. Not in a rush to get there, but also not looking bad. His Bank of New York been acting pretty well. Got the highs up here at 40.80 to watch. Northern Trust. Okay, watch the highs up here on Northern Trust at 70.84. Zion. Yeah, I mean, consolidating at the moving averages is not really the best candidate here if you're looking at banks. Broker-dealer, acting well, consolidating up here at the highs. Goldman Sachs, I mean, Friday opened and then sold off, but it's consolidating up here. Morgan, consolidating, see if this will pop up. Legg Mason, we talked about this last week, I believe. Nice trajectory here, but again, waiting for a pullback or consolidation. Let's look at some other stocks. Caterpillar with a nice push up through the 200-day. I want to see a digestion here. And I hate chasing momentum, so I'd like to see a consolidation or a small pullback, but a nice push above that 200-day moving average. John Deere hasn't gotten there yet, so is this going to be a laggard that we are going to watch? We'll see. It's in a nice consolidation here. Let's look at some tech. Apple, yeah, just what a monster. Again, overbought. I'd like to see a pullback here. I think that it's on fumes here. Not saying it's a short. I just like to see a pullback for a safer entry. Something like this. Nice consolidation right here. Really nice push up here. Amazon. A nice push over the 200-day moving average, but it closed below the open. So it's looking sloppy, but maybe it's a big picture double bottom. You scrunch it up, it could be a big picture double bottom here. Needs some work for sure. Google-licious. Higher low here, but below the moving averages. I mean, again, am I looking to jump in and short here? Probably not, but it's really got to get moving here. I mean, maybe we're going to put in an ABC here. Whoops, A up, B down. Let's see, I mean, there's maybe some upside potential here. You really want to watch this because this is where it broke down. We highlighted this a few weeks ago. As long as it holds that, you got to put the nod to the downside on Google. Even though overall it's kind of a big picture range. Facebook, just sloppy here. I mean, it's not a short. Somebody wrote me and said, is this a head and shoulders? I guess if you squint, you could see a head and shoulders. And it doesn't look like a great looking pattern here. It looks more like it's just consolidating. Here's Netflix. Yeah, Netflix came up. Nice gap down off of, I believe this was the earnings announcement. Again, I was kind of out of it back then, so with my back. Nice push up. A little consolidation here, and it actually broke down. So now what you want to do is you want to watch the middle of this candle. That's going to be the strongest support. Comes in the top 50% of the green candle. So if that holds, all right. But still has its work to do to fill the gap. How about Chipotle? Yeah, Chipotle in a nice pattern as well. Could be a possible inverted head and shoulders. How about Priceline? Whoops, I gotta spell it right first. Yeah, Priceline, sloppy, but it does have this consolidation here. I mean, it's just, yeah, all right, it's a triangle, but it's really not a great looking one. If it releases to the upside, you got the 200-day moving average above. How about Las Vegas Sands? Yeah, could be putting in a potential bottom here. Oh, I got to go back to Twitter too. Let's just do Wynn Resorts. Consolidating here. Maybe it's a diamond. I don't even know. It's consolidating here. It's on most of its moving averages with the 200 above. Yeah, I just keep remembering what people write to me and ask me to look at Twitter. Yeah, I'm not really a big fan of it here. It's consolidating here. You got the moving averages above that are just coming in because this was a relative new issue. Not even a year old yet, I don't think. Is it a year old? Yeah, it's a year old. Sorry, it's just over a year old. It's not looking great. All right, if I had a gun to my head, I would say that it's going to test the lows before it tests the highs, but you really got to wait till it releases out of this muck. Bonds, still consolidating here after this climax blow off. All right, if you're looking to trade bonds, it does have, bonds and notes do have some nice intraday ranges, But right now it's consolidating, and I'd like to see if it can blow the roof off of this thing. You'd be looking at 144 as a first short-term target. That's on the bonds. Here's notes. Similar. Here's gold. 50-day moving average. Got to watch this. If it holds, then look for a retest back down. But if it can get above it, maybe it's ready to form more of this consolidation in here. Silver. Nice push up. 50-day moving average, though, we want to watch for resistance. Crude oil still looks lower to me. Still think crude oil is going lower here. Right now it's in a pretty good downtrend. It does have support here, but I think it's going down to these 09 lows. That's my opinion. Of course, my opinion is worthless without confirmation from the market. Wheat, again, nice strong downtrend in the grains, maybe turning here. And again, this could all be corrective. Not saying it's now we're going to go into a massive uptrend, but for now, continue to watch for short-term pullbacks for trades. Soybeans, corn, and wheat. Sugar, just consolidating here. There's your trend line to watch. See if it'll get above that. Coffee, right on its moving averages here. So if it loses below this, watch 180. 180 looks like a key level to watch here. All right. So again, watching for a pullback here. I think the pullback will be a buyable pullback. We are overbought here. We are stretched here. I am not looking to short anywhere past intraday or maybe a short-term swing if there's a setup. It looks like it's a stock picker's market. Boy, I really hate that term, but that's what it looks like it is. You got stocks like Apple, which are just flying high. Then you got stocks like Google, which look like crap. That's at least in the tech market. So anyway, that's my son going crazy here on this Saturday morning. I want to wish everybody who is listening to this video a very happy Thanksgiving, even if you don't celebrate. Lots of things to be thankful for. I know I'm thankful for you listening to this. So have a great holiday. I will talk to you in the daily email. Don't forget to sign up for the email list to learn about the Mastering Market Timing and the January effects list, which are coming up in a few weeks. As soon as Paul gets back from vacation, we're going to go for it. You can contact me at tiny@stockmarkettrendsx.com. I will talk to you in the daily email or in next week's video. Have a great holiday.